Okay, I had hoped this was going to be a quiet week. I sat down on Monday morning expecting maybe a model update, a funding round, something I could knock out in a couple of paragraphs. Well, that lasted about an hour. And then, late Friday, Sequoia Capital dropped something that changed the whole picture. Because this week, AI got its first unicorn, the US government created a whole new category of risk for AI tools, the price of frontier AI dropped again, and one of the most powerful venture firms on earth named your practice a disruption target. Wow, let's get into it. Okay, I'm starting with a story that broke late Friday because it's the most important thing in this roundup. Sequoia Capital, the firm that backed Apple, Google, Stripe, and about half of the most valuable companies on earth, published a thesis called Services, the New Software. The argument is that the next trillion-dollar company won't sell you a tool, it will do the work. They named specific markets: insurance brokerage, legal, financial services, and right there in the middle, accounting and audit. $50 to $80 billion in outsourced spend in the US alone. 340,000 accountants lost in 5 years. 75% of CPAs nearing retirement, and growing demand. And then this line, and I want you to really sit with this. A company pays $10,000 a year for QuickBooks. That would be a big company. And $120,000 for an accountant to close the books. The next legendary company will just close the books. They're not talking about replacing QuickBooks. They're talking about replacing the person who uses it. They're talking about you and me. Now, this is too big for a few-minute roundup here. Tomorrow, I'm doing a full breakdown. What Sequoia's framework actually says, where CAS practices are exposed, and what's defensible. And then on Friday next week, the 20th of March at 3 p.m. Eastern, I'm going to spend a full hour or more going deep on this in a webinar. Your pricing, your staffing model, your 5-year plan. It's totally free. Please register at the AI Accountant. Now, for the 3 stories that shape the rest of the week, and I want to say up front, each one of these is a significant story in its own right. We're going to be spending more time on each of these throughout this coming week, so stay tuned. Make sure you're subscribed to the channel so you don't miss any of it. Okay, you ready? Story number 1, and this is a big one. Basis, an AI native accounting platform, just raised $100 million at a $1.5 billion valuation. That's accounting's first unicorn. The round was led by Accel, Google Ventures, and Lloyd Blankfein personally. Now let me tell you what they actually do, because the architecture here matters. Basis doesn't work like ChatGPT, where you type a prompt and get an answer. They run a multi-agent system. A supervising agent coordinates specialized sub-agents, one for journal entries, one for reconciliation, and one for technical accounting. These agents work autonomously on complex workflows for hours, not minutes, hours. Then they deliver finished work for human review. And every output comes with the data sources used, the mapping logic, and a confidence score. You're not just reviewing the answer, you're reviewing the reasoning. Now, they say that about 30% of the top 25 US accounting firms are already using Basis. Boulay, Clark, Nuber, Pinion, UHY, and WIS reported time savings of 30%. And they recently demonstrated the first AI agent to autonomously complete an end-to-end US 1065 partnership return, start to finish. Now, 2 caveats. It's waitlist only with no public pricing. You can't sign up today. And the entire platform is built on AI's models. Now, that's a vendor dependency worth noting. But the signal is unmistakable. Combined with a cruel $75 million raise earlier this year, that's over $200 million in venture capital for AI accounting in 2026 alone. The commodity layer isn't theoretical anymore. It's funded. Okay, story number 2, and this one is about risk. 2 things happened this week. First, the Pentagon designated Anthropic, the company behind Claude, a supply chain risk after Anthropic refused to remove restrictions on mass surveillance and autonomous weapons. Within hours, OpenAI announced its own Pentagon deal. ChatGPT uninstalls surged 295%, while Claude topped the US App Store. But the second signal is important. 78 AI chatbot bills are now active across 27 US states. Oregon's bill passed the Senate 26-1. Virginia's AI Chatbots and Miners Act is headed to floor votes. Meanwhile, the federal government is pushing back, sending Utah's Senate Majority Leader a letter saying that the state's AI Transparency Act goes against the administration's AI agenda. And of course, for our Canadian viewers, Canada's proposed AI and Data Act died when Parliament prorogued last year. There's still no binding AI legislation north of the border, just a voluntary code of conduct and a newly appointed AI minister, for whatever that's worth. The regulatory picture in AI is wide open right now. Now, I'm not going to get political about any of this, but I need to be direct about what it means for your practice and for mine. The AI tools we're building our workflows around are subject to government policy decisions that are volatile. They are fragmented and they can change week to week. One designation, one executive order, one state or local bill, and the tool you've integrated into your monthly close could face new restrictions overnight. And notice how this connects directly to story number 1. Basis is built entirely on OpenAI models. If OpenAI's government relationship shifts, or if a state passes a bill that restricts how AI agents operate in financial services, Basis customers are exposed. But the same logic applies for any single vendor dependency. So the practical takeaway for us: build your AI workflows to be tool agnostic. Context engineering, that's building your firm's knowledge in structured, portable formats that work with any model, is what insulates your firm from vendor-level political risk. Now, we're going to go deeper into this on Thursday. Okay, for story number 3, OpenAI shipped GPT 5.4 this week. 3 things matter here. First, a 1 million token context window, matching Claude's. Second is native computer use, a first for OpenAI's general purpose models. And third, pricing at $2.50 per million input tokens. Now, DeepSeek version 4 is also imminent. A trillion parameter model on Chinese chips, with leaked benchmarks suggesting frontier class performance. The pattern is relentless. Every month, context windows get larger, reasoning goes deeper, and costs drop. That $200 per employee per month AI cost benchmark I talked about last week, it's starting to look high. At current trends, you could be running frontier quality AI across your entire team for less than that. Which means the cost barrier to adoption is disappearing. And the gap between firms that have adopted and firms that haven't just keeps widening. Okay, now just for a quick hits news roundup. Anthropic published labor market research using actual Claude usage data measured against 800 occupations. Programming tasks at 75% coverage. Data entry at 67%. The gap between theoretical and actual AI automation is closing fast. Now, we're going to do a deep dive on what this means for accounting roles on Friday. The SaaS apocalypse continues. About $2 trillion in software market cap has gone since January. Jason Statz called Claude Cowork the most consequential AI tool for accounting firms in his latest newsletter. And my book on using Cowork for your practice is coming very soon. Head to the aiaccountant.ai to be the first to know when it drops. The Journal of Accountancy asked how accountants will learn new skills when AI automates the foundational work that used to train them. Now, if you caught our coverage on the talent trap over the last few weeks, you're already ahead of this one. Well, so that's the week. Sequoia naming your practice and mine a disruption target, an AI accounting unicorn, and government risk that nobody is pricing in. And of course, frontier AI getting cheaper by the month. If you want this kind of analysis in your inbox every week, sign up for our newsletter at the AI. One email, the stories that matter, the CAS angle on every single one. And remember, tomorrow I'm breaking down the full Sequoia thesis. And on March 20th, I'm going deep for a full hour. register for the webinar. The link's in the description. I'll see you tomorrow.